All right, good afternoon, everybody. Excited to have you with us here. Looking forward to been looking forward to putting this together for quite a while and finally able to get the dates. Excuse me if some of this technology, people listen to me for my ability to close loans and help out, not tech, so not my strength there. But tonight, we're going to spend some time talking about part one of a three-part series, Home Buyers University. Tonight's going to be Home Buying 101. Next week, next Wednesday, I believe, we're going to be doing credit fundamentals. And then following that, our third event in our three-part series is going to be creating a household budget. So really excited about that. Excited to spend time with you. And look, this short 1 hour, if that, whatever it takes. So let's go ahead and really just want to share knowledge, right? And making sure that you're getting ready for as I start every show every week, your largest investment and most valuable asset, which is buying a home. And kind of see there, the possibilities of home ownership are wide open. It is an amazing time right now to be buying. Look, lots of challenges, but those aren't for you to worry about. That's for when you pick the proper lender to help you out with that. So let's kind of get started here. We'll do a little bit of a intro, really, and just kind of go through and go to the next slide here for you. And there we go. Pause that. So who am I? I think now more than ever, it's important for you to make sure that you are using someone with a proven track record. Super excited. Scotsman's Guide just recognized me again this last week. Came out 7 straight years of finishing in the top 1% of loan producers across the nation. Mortgage Gumbo, number one most listened to radio show in its time slots on the weekend as well. But you got to have a proven track record, but as importantly, you've got to have someone that has the tools, the programs to be able to help meet your needs. Not everybody is painted with the same exact brush, right? So it's important. So having the programs, but then more importantly, I think where one of my strengths of 30 plus years of doing this is being able to know and how to make the programs work for you. Right? And I use this analogy all the time. You could take the same teacher that makes 50, 60 grand a year. Well, one teacher wants to buy a $300,000 house. You could take somebody that makes $300,000 a year, and that person wants to buy a $150,000 house. So everybody's different. So it's finding out what are those needs so we can make sure that we get them met for you. It's not about how quick or filling in blue boxes just to get you to an application. It's finding out specifically what are your goals so we can make sure that everything lines up with that. That, to me, is what's very important. So I think, look, I've been proven the track record of doing this 30 years, recognized the last 7 in a row, is especially during these times, right? There's been challenges. There's been a lot. But being able to navigate and guide you guys and so many of my clients through these choppy waters the last couple years, I think it says something when you could end up on top. So that's what you want to make sure that you are working with, for sure. I think one of the other things here is understanding in today's environment, and I see this so often because of you, the Gumbo Nation. You refer folks over, maybe somebody, your coworker, colleague, family member, and the horror stories that I hear from home buying, refinancing, reverse mortgages, no matter what it is, and and that's why we have what we call the Total Home Authority. And, whether it's the Queen of Insurance, TWFG, Jeff Leshershare and his team, the Legends of Law and Title with Florida Lee, and all those other people and all the realtors that I work with are part of what's called the Total Home Authority. And one of the things that we make sure that we understand is this, and it's that top line, right? We work for you. And I think that gets forgotten a lot of times from lenders, from realtors. They're busy trying to put you in a program or in a home that they think's best for you, but it's having a team that works for you. And that can never, ever, ever be forgotten. Florida Lee this week has been able to help out with a succession issue, right? So we can get a loan done where another lender said, sorry, can't help you, right? Colette and her team, whether it's the Queen of Insurance, the Princess of Policies, Jamie, when we're looking at that, they're able to reevaluate people's homeowners insurance and look at it so we can make sure that we can help them get into a budget. But understand this, okay? You hire us, we work for you. It's not vice versa. It's our job to always make sure that we are explaining that to you when you're hiring part of the team there. So let me go back here. Again, stick with me with the tech stuff, right? There we go. Let's just let it run through here. And then I think what you want to, like, okay, great, that sounds good, but how are we different? Well, number one, we're your lender for life, right? And that's because we're going to offer you that customer service. We're going to answer your questions after the close, after we leave the table, right? And you can't build and be in this industry for 30 years like we have and have the success that I've had along with my team without being able to gain trust. And y'all know that who's listening to this. You can't just, trust isn't given, it's earned. And I think our mentality is what we want to make sure and how we're differing is the customer service, ongoing communication, making sure that you always have the whys. If we're going with this program, here's why. If we're not going with this program, here's why. Here's what we need to do with your credit to make sure that we get it right. It's a why. You're not supposed to know this stuff. That's why you trust me. So we're always going to be making sure that we provide those whys because we want your mentality to be this. Why not me? Why can't I achieve home ownership? Why can't I live the American dream? And even if it's not right now, what we're going to do is teach you and work with you to where we could show you when. We don't judge you by your credit score and go, good luck. We wish you the best. We'll talk more about that next week when we're talking about credit fundamentals. But I truly believe you're not meant to rent. And I know that sounds cliche-ish, but it's understanding that. And then lastly, speed equals trust. And for the last 5+ years, we've been averaging 15 days on our approvals. So speed equals trust. We're always waiting. Our buyers are always waiting a lot of times to get to the contract date because the sellers can't get out in time. Or maybe the loan that they're doing on theirs isn't going through in time. So that, when you're asking, hey, what separates you, that's it. Google my name. Google Mortgage Gumbo. Go read the reviews. Go see. That doesn't happen by happenstance. It's over time and making sure that trust is earned. Nobody just expects it to be given, okay? All right, so let's get into what we're going to be looking at a little bit tonight, right, for it. So thinking about buying a home, hey, be one of your best moves. So the agenda, we're going to go over some mortgage basics, learning what your options are. Hey, what are some key terms that you need to understand and know? Pre-qualified versus pre-approved. One word, but a gigantic life-changing difference. So I'm going to explain that to you. And then, are you ready to buy? We'll wrap up with that. So let's get started. What we're going to do is just kind of go through a little bit here. And, you know, at Mortgage Gumbo, we're more than a mortgage. And we want to be have a finance partnership to grow and do what you need to do. And that's by having, if you have heard of it, we have it. There's not a program on here. So whether it's fixed rate, FHA, USDA, VA, convention, all these things that you see, what's not mentioned are some other program. Construction loans, renovation loans. Hey, if maybe you're a homeowner now and you're listening because you want to learn a little bit about investing, we're going to be doing a webinar on that down the road as well. DSCR loans, reverse mortgages. So we're more than a mortgage. We are the total package here. We're a one-stop shop. There's nothing, if you've heard of it, we have it. And we could put you in the right place. Simple conversation today. Hey, do you have somebody that could help me out? I'm looking at doing a 1031 exchange. How do we get that done? 30 years of experience, that's what I'm able to help you out with. All right, let's jump into really, let's cover some of the highlights here of what just some of these basic and programs are, okay? And so let's start with conventional loans. And conventional loans, a lot of people, what you need to understand is for a first-time home buyer, you could get in with as little as 3% down. Now, for most, they do 5%. But a first-time home buyer, so you're going to hear a lot of, oh, ask about our first-time home buyer program. That's one of the craziest myths out there. It's almost like when people talk about and people say that they bundle, right? It's a play on words. Listen, there's no such thing as a first-time home buyer program. You have some benefits like 3% versus 5%, but if you haven't bought or sold a house in 3 years, you could qualify with 3% down. So those are things to understand. A gift, some of the highlights as well. A gift for down payment. How great is that? Maybe you don't have the money for the down payment. You could get a gift from a family member. We have programs here at Mortgage Gumbo. Everybody you hear, oh, you got to be self-employed for 2 years. No, you don't. We work with self-employed folks all the time, and we only use 1 year of income. Now, you have to have been in business for at least 5 years. There's some exceptions, but we do it all the time. You want to make sure that you, again, have the programs, but does somebody have the capacity to know how to work the programs? And then highlighted at the bottom, the beauty of this is 3% seller-paid concessions on 3 to 5% down. If conventional, they put down 10%, then it goes to 6, 20%, then it goes to 9. Right? So conventional is a great loan, a little bit maybe stronger buyers. A lot of folks, when they're buying a second home, will use a conventional loan. Now, I wrote here because one of the myths, everybody, when I talk to them about, oh, I need to have 20% down. No, you don't. You could get in a home for a little as 3%. We're going to talk about programs where you get in with no money down. So a conventional loan is a great option that we'll look at for you, okay? Next one, FHA loan. Man, this program right now, over the last couple years where rates have been a little bit elevated, this has been a program that we've been able to take advantage of because the rates are a little bit lighter and lower. So, you know, here you're going to have a down payment as little as 3.5%. Oops, let me stop this here. Sorry about that. I don't get ahead here. There we go, FHA. All right, boom and boom. All right. So down payment is as little as 3.5%. Hey, you could have a co-applicant or co-borrower if you need that. Again, gifts are allowed here. When I put relaxed debt-to-income ratio restrictions, look, one of the things we understand and why I'm trusted is I understand what you're willing to pay and what you can afford is two different things. But that we also talked about that teacher that makes $60,000 that wants $300,000. The guy that makes $300,000 that wants $150,000. Well, FHA allows some debt to income ratio a little bit more relaxed. We can get approvals up to 55%. If that's the home, that you absolutely got to have it, want it, we can make those things work with an FHA loan. Now, PMI, it's not optional. It's going to be on there for the life of the loan. With the caveat, in case any haters are listening, if you put 10% down, then it falls off after 11 years, blah, blah, blah. FHA is going to want to look at 2 years consistent employment. Now, that doesn't mean you got to be at the same job, but are you in the same line of work? Did you leave, one place to go to another, same type of work? They're not going to want big gaps of employment. However, if you just got out of school and you don't have 2 years of employment, well, we can't force you to have 2 years. So I want to make sure there, because a lot of people are like, wow, I haven't been at my job for 2 years. Don't have to be. You don't have to be. And in the beauty of the FHA, what I absolutely love is the 6% seller paid concessions. 6% is normally going to cover absolutely everything when it comes to your closing costs, taxes, insurances, and any other closing costs that you got. So a lot of times when we're setting up our first-time home buyers with FHA loans, they're coming in with the absolute minimum, the 3.5% of whatever they're borrowing, and we're getting a seller to pick up the rest of the tab for them. So this is a great program, like I said, especially over the last several years where rates have been a little bit elevated. And then the myth I put here is I need perfect credit. Folks, I close this year already probably 3 or 4 purchases, FHA, with people who are under a 580 credit score, had a 540. So that is the biggest thing, and why we're doing this is making sure that you understand you can't, everything that you read online, you've got to be careful about, right? Again, are you working with a lender that has the tools, but more importantly, knows how to work the programs where you can benefit? So many of you that come to me, and y'all amazing, you refer folks over and your friends, family, colleagues. And I'm able to do things that they were turned down. So maybe they've been sitting on the sideline. How many people do you know you're like, gosh, I wonder if they qualify? Or you're disheartened. You're watching this and you're like, well, I got turned down by Schmuckatelli Bank. Well, let's have a chat, because we're not going to judge you by your credit score. We're going to figure out how to get you in that right program. All right. Next program here, we're going to talk about USDA, rural development. This is a 100% program. Now, people hear USDA. That doesn't mean you got to go live somewhere where they got cows in the yard and chickens and ducks and all that kind of fun stuff, right? Pigs. No, USDA rural development loan is amazing. It's 100% financing. What that means is no down payment. It's a fixed rate, so your payments remain consistent. Now, the homes have to be located in a designated USDA rural area, but we look at that for you. The biggest thing with rural development, and these are starting to become more popular now that the rates are starting to fall, is there's some income restrictions. But for a family of 5, a family of 1 to 5, combined income, and that means if you've got 3 kids, or if you're a single mom or single dad and you've got 4 kids, you can make up to $119,000. If it's 5 plus, it's over $140,000. That's a lot of money. And we could get you in with no money down. And then look, what does the seller pay there? 6%. I've got 2 rural developments right now. They're literally coming in. We're joking. They were laughing. One of the buyers said, hey, I'm coming in with the lint in my pocket like you told me. We're actually getting them their money back for their appraisal and for their inspections. They're getting paid to buy a home because it's 100% financing, and the seller is picking up all their closing costs. So this is just a great program, and as rates are beginning to recede, we are seeing this is becoming much more popular. But again, this doesn't have to be out in the country, but there's certain areas, right? Like one area that's not out there is like if you live in Metairie, right? That part of Jefferson Parish. But there's places on the West Bank that's part of Jefferson Parish that is. So we've got to look at that. But that is my job. That's why you trust me. It's my job to let you know, hey, where are you looking to buy? And we're going to look at it. We're going to look at that for you. Next program, best program out there, and only certain people get to use it, and rightfully so, but that's our VA home loans. Love doing our VA loans. It's 100% financing, and it's for veterans and or qualifying service members. It comes with a funding fee upfront, percentage based on your first time buying and all that stuff. We could get into that. However, you may be exempt. We'll look into that for you, and then that's waived. The beauty of VA loans is you never have any PMI. There's never any private mortgage insurance on these loans. And when you refinance, you do a refinance, which is called a VA IRL, which is an interest rate reduction refinance loan. IRRRL, not like some sergeant or general named Earl. And then, as you see here, 4% seller paid concessions. And the myth I wrote here is, oh, I was never active duty. You don't have to be. You don't have to be. But these are the things when I'm having a conversation, the initial conversation that we're going to be having is it's going to be simple. It's going to be very, very simple. Where are you looking to buy? Or are you a veteran is always the first question. Nobody ever goes, heck no. You know what they go? No. I'm like, hey, me neither. I was a chicken. But are you a veteran? Where are you looking to purchase? And roughly how much money you make. If you're not a veteran, we're not going VA. Where are you looking to buy? If you're looking to buy New Orleans or Metairie, all right, well, we're not doing rural development, right? Because that doesn't qualify. And then income. Hey, it's me, my family, and we got 2 kids, and we make $100,000 a year. All right, boom. Well, and we want to live in Mandeville, Chalmette, or somewhere in Baton Rouge, North Shore. Okay, good. So right then and there, within 5 minutes, I'm already starting to dial in what programs, because a lot of questions are, hey, how do I know what program? That's why you come to me and what our team and what we get done for you. It's our job to figure that out. Now, I think home ownership, look, we're glossing over a lot of this, and there's some key things that we're wanting you to learn, but I think with home ownership as well, you got to understand what some key terms are. And understand that home ownership, it's a wealth-building tool. And some of the key terms I want to share with you tonight is appreciation and understanding that homes are a long-term investment. And what is appreciation? That's when a home increases in value and a debt attached decreases. So your home keeps going up in value, but as you pay it down, it goes down. Well, or maybe you add some improvements. Maybe you add some square footage. Well, that is appreciation. And that's when it comes time to sell, you get top dollar. So that is appreciation. And you'll hear people talking about, oh, over the last couple of years, appreciation's been down. Well, listen, it's going to be hard to ever top what happened in 20. Not that we want COVID back, but it's going to be hard to ever top what happened in 2021, where you had 20% appreciation year over year. But the norm is usually between 3 to 5%. And it's all real estate is local. Real estate is local. Understand that. If you're buying in Chalmette, it's going to be different than if you're buying in, if you're buying in Araby or Mandeville to Covington or Hammond to Livingston or Slidell. It's all different. It's local. Look out your window. That's the market that you're dealing with. So appreciation's different in certain neighborhoods. Equity. Think cha-ching. Think moolah. Every time that you make a payment, you're building equity. Every time that you make a payment. And once that equity builds, then you're able to maybe refinance down the road and take advantage of that equity. Maybe with a home equity loan or get cash out to pay off some debt. Doing a lot of that right now with all those folks who had 20 and 19% increases. But equity, that is your cash. That is your wealth that you are building. It's called equity. That is kind of your home's piggy bank, known as equity. A couple other key terms here that I threw in. Escrow. And unless you're putting down 20% on a conventional loan, you're going to be required to escrow. You could even put down 20% and you could still escrow, but you have that option. And this is what your escrows are this is your cost from your property taxes, homeowners insurance, right? Your PMI. And it's escrowed and it's collected into your payment in small amounts, so when your taxes come due at the end of the year, boom, the mortgage company sends in that payment. When your annual insurance renews, boom, the mortgage company sends that payment in for you. But it's very important to understand that on what escrows are. And I teach every one of my home buyers this, and so many people don't know, and you're not supposed to. It's my job to help you understand that. In other words, four-letter word, right? PMI, private mortgage insurance. Most of us would not be able to, so you need to change the narrative on this, on PMI being an ugly word, and understand most of us wouldn't be homeowners if it wasn't for private mortgage insurance, if we didn't have the backing of private mortgage insurance. And private mortgage insurance is going to be on conventional loans, like I said earlier, under 20%, and it's going to be added to your monthly payment. Now, credit, loan to value, those are different things that affect what the amount is on the cost. FHA is different. It's called MIP, monthly insurance premium. But with a conventional loan, hey, it automatically terminates at 78% once you got 22% equity. FHA, it's on there for the life of the loan, unless we refinance out of FHA into a conventional product. But the narrative PMI, I don't want PMI. I don't want that. Many of you won't be able to be homeowners if you don't have it. However, as rates go down, we'll talk for plenty of years. I was the only person that ever talked to my clients about buying out PMI. Yes, that's an option. And we can chat about that when it comes time. And then let's throw in, it's not in here, but PITI. That stands for principal, interest, taxes, and insurances. That is what makes up your mortgage payment. So many of you go online, and it's such a reality check. You get clickbaited into these calculators that still have 3.99 as a rate. And you go, oh, $400,000 at 3%, I could afford this. Well, what they don't have is taxes and insurances. So PITI is what your mortgage payment consists of. That's your principal, interest, taxes, and insurances. And it's so important to make sure that you understand that. All right. This here is just so important. And this is why buyers trust me. Because one word could be a life-changing difference. And I'm thankful to all those lenders out there who do pre-qualifications. It's unfortunate I get the buyer because of the lackluster, but I want you to understand what pre-qualified is. Pre-qualified, there's no analysis of your credit. A pre-qualification is not worth the paper that it's written on. Hey, I make $100,000 a year. I'm self-employed, and I want to buy a $300,000 house. Okay, $100,000 divided by 12, great. But nobody runs your credit. Nobody looks at your debt. There's no analysis done. But it's quick, right? Hey, all right, yeah, I'm pre-qualified. It is the worst thing in the world that you can do. A pre-qualification means nothing. When you work with me, at minimum, you're going to get what's called pre-approved. And what that means is I'm going to require an application. I'm sorry. You're hiring me to help you with your largest investment, most valuable asset. I'm going to want to make sure that I get an application. I'm going to want to confirm what your income is. Especially everybody in South Louisiana. Look, a windstorm comes through. We got hard hats, a chainsaw, and a truck. We're all of a sudden tree cutters, right? We don't have Fortune 500 companies here. So all of us are trying to get that grind, pick up a few extra bucks. Well, that's why we want to see, how do you get paid? Have you been at that new job for 2 years? Oh, yeah, I've been there 2 years. Well, you know how many lenders don't understand that just because you've been there 2 years, but if you only been getting overtime or bonuses for one, we may not be able to use it. So they qualify you on the wrong amount, thinking you qualify for $350,000 when it's $275 or even $200. So a pre-approval is at minimum what we're going to do for you, but what we like to do is what's called a fast track. And that's where we get you, hey, you serious? You're thinking about getting into homeowner? Great. We're going to dial in the program. We're even going to send it to underwriting. That way we guarantee your approval. We guarantee it for 120 days. So when you go out and make an offer, it's like cash. And we do this all the time, and that's how we're winning in today's environment. So it's so important to make sure that you are pre-approved or fast-tracked with us, because it will save you thousands. If you get pre-qualified for the wrong program and you're under contract and you really love this house and then you got to switch, it may cost you a lot of money or cause you, even worse, to lose the house, and we do not want that. All right. I share this here because I think it's so important for you to understand what's out there. Oh, I know a realtor. Oh, I know somebody. Oh, my cousin's nephews, aunts, sisters, brothers, step cousin, Mike, just passed his license. I'm going to try to work something out with him. Look at this graphic. 71% of realtors did no transactions last year. That's 7 out of 10. 1 to 4 transactions was 15%. And if you break this down, it's even worse if you got down to 1 or 2. But 85%, 86% of realtors did less than 4 transactions. Is that who you want to be working with? And I bring this up because winners hang out with winners. And you want somebody representing you to make sure that you, buying a home is brave. And you want to make sure that you, when you're doing this, you win. And you've got somebody that knows how to negotiate, somebody that knows how to write up a contract, knows how to get you out if things don't go right. So I think it's so important when we're sharing this to understand. And we talk about our total home authority. Whatever market you in, I've got a winner that I can help you work with. But we don't want you working with that 71% who've done nothing. And this is where, again, 7 straight years, consistency. Working with folks who, no matter what rates are, knows how to get deals done, who is trusted, who is vetted, who's proven. That's what you want. When you are looking at buying a home, you want somebody that has your back. You know, should I buy? Why buy a home? Well, here's why. It's simple. Homeowners are 43 times wealthier. 43 times wealthier than renters. It's that simple. Because of appreciation, because of equity building. So get that first home. Let's get you started. Let's find out what you can qualify for. Let's start building that wealth building tool. Let's start using that home to work for you. But 43 times wealthier than a renter. That's why you want to buy a home. And then lastly, hey, are you ready to buy? Right? Do you have the income? Do you have the employment? Hey, where's your credit score? Have I been saving? You can't time the market. You can't go, oh, I'm going to wait. I want to save up a little bit more. You're constantly going to be chasing your tail. Let's have a conversation. Let's find out if now is a good time for you. Let's have that discussion. I think it's so important in today's market, those who are trying to time. You see headlines. You hear all this. We got the war going on. We got all these things going on. The one thing that has been tried and true over time, and go look at all the billionaires, all the rich folks. Many of them built their wealth through real estate. And it could start with one simple deal. And at Mortgage Gumbo, whether it's a $120,000 house or it's a $1.5 million house, you're going to get 100% of our time, and we're going to make sure that you feel like you are the only person that matters, because you are. You are. And we want to make sure that we get that right for you. So listen, appreciate it. Glad you spent some time with us this afternoon. If you want to get a copy of this, we'll be reposting it. Check it out. Make sure you stay involved. Next week, we're going to be doing our credit fundamentals where, hey, how is credit scored? Some tips and tricks to help you get yourself into maybe buying a home or making sure that you are always able to maximize out your buying power. All right, let me answer a couple questions real quick. How will I know how much I need to close? You won't until we have an application and we determine what program. Hey, if we're going rural development or if you're a veteran, you may not need one red cent. So let's see what the program is. Let's see what you're looking at purchasing, and then we can help determine that. What credit score do I need? Well, we don't treat you like a number. So the credit score is going to determine what program, but there's no, for me to tell you, hey, here's what it needs to be, and then, we're going to look at it. If you're a 580, we know you're not going conventional or rural development. But if you're a veteran, we could go VA. We could go look at FHA. So there's not one big brush. And listen, I'm going to tell you, there's not one big brush with me. Plenty lenders out there, yeah, they paint everybody with the same brush. I don't have to, because I have all the programs. I have all the tools. I've got the knowledge. I know how to flip things inside out to help you win. We'll cover these two. Here's another. What if I have a bankruptcy? So what? So what? Let's look at it. Let's find out what kind. Was it a Chapter 7? Was it a Chapter 13? How long ago was it? And see if we can work through it. All right, I appreciate everybody. Hey, that was quick, nice, 40 minutes. Appreciate everybody taking some time with us this afternoon. Go out. Go visit mortgagegumbo.com. Google Dwayne Stein. Check out the reviews. I think it's important that you know who you're working with, especially in today's market. All right, hey, tune in Saturdays, 9 and 12 on 99.5 WRNO or the iHeartRadio app, Spotify, Apple, any of those places there.